Good day, active trend traders. This is Dennis. Welcome to the weekly triggers for active trend trading, the active trend trading system, or what is better known as on the radar. These are stocks and ETFs that are coming up on our radar that could potentially be setting up for the week of September 4th, 2017. I hope everybody's having a wonderful Labor Day. I went to a conference first thing this morning online. It was absolutely amazing. It was about trader psychology, about how to get rid of limiting beliefs in our trading. So be looking for something coming from active trend trading about that topic in the near future. Remember that all the materials we present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. I'm really excited about some of the things that we're doing in the areas of seasonality with active trend trading. As I've said before, seasonality gets us in the ballpark. In other words, that gets us into the areas where that's where the game is going on. The technicals that we're observing is what gets us into the ball game. Then we're going to be providing some refinements on those seasonal technicals that all premium members are going to be able to take advantage of moving forward. So what is the intent of this video? One is I want to cover entry triggered based on active trend trading rules, conditional orders with time stops if that is appropriate for the day. These are all intended to aid members who are unable to place orders based on intraday triggers because basically they're working during market hours. We want to look at opportunities that support resistance and the range, and on range-bound price actions, and we want to recognize conditional orders. Please recognize this. Can heighten risk of whipsaw with this technique. However, for sometimes if a trader is working during the time, conditional orders that are included, that have a stop loss and a profit target included when you place that order, is a good way to target shoot and to get into a position that you may not be able to get into if you're only trading after hours. So our strategies plus one includes our strategy one, portfolio building. 63% of our capital is allocated to this. We'll be looking at 4 to 5 positions. It includes positions that can be in IBD growth stocks. We have a stable of quality ETFs that follow indexes such as gold, oil, financials, biotechs, and of course there are some stocks that we just follow, like Tesla, like NVDA, like Netflix, because they move with great technicals throughout the week, throughout the day, throughout the month, and therefore give us great signals. Secondly, option is just a small option portion. 10% of our capital is allocated to that, and we'll be working primarily directional spreads and our directional option trading. And then strategy number 3 is income and wealth building. 27% of our capital is allocated to this, where we own long leaps in the spiders, the Tesla, and the NVDA. What I'm looking for is somewhere between a 50 to 100% return after we pay off the initial investment. So this is kind of like my rental house type of strategy that pays us both wealth building, in other words, growing our capital, and also income on a weekly basis because we sell weekly premium, weekly options against it. Then early warning alerts, we just had a trigger go off in early warning alerts. Normally this on average triggers about 3 times per year. So far this year it's only triggered once, and that's okay. Through our back testing and through our work with this, there were years where it would only trigger once or maybe twice. This year may be one of those. It triggered back in November of last year and just here recently over the last couple of weeks. So at the end of each month I reallocate the funds. And so right now we have reallocated our $150,000 worth of trading capital between the 3 strategies. No strategy 3. I do not reallocate to strategy 3 because basically we have our foundational position that we set in place at the end of the year. Once it's achieved, it's 100% gain. We will basically close those out and then just let those funds set. We could reallocate over into the other 2 strategies, but that introduces a variable that I don't like to introduce too many variables for our members to have to, think about. So for strategy number one, we've reallocated. So for every position, if we have 4 positions, I can allocate $23,928 for a full position. Strategy number two, I can go up to $3,019 for a full position of, that would be like buying directional options. And we, of course, would put our stop loss on top of that. And strategy three remains the same throughout the year. I mean, it grows in value, but I don't reallocate dollars into it on a monthly basis. Here's something new that I'm introducing for this month. One of the things that we've been challenged with this year is basically we've got a really strong setup of index ETFs and industry and commodity ETFs that and it has been challenged to stay focused in order to say when you get a trigger, it's time to get in. So what I'm doing going forward is I'm introducing and putting the this into a little table format. And if we've got a setup like an XLF, we've got a setup that was a TSI tick up. Now I'm going to be looking at potential trade in FAS, which is the leveraged ETF that emulates XLF. Same thing, IBB, nothing. Although I am looking for support at 330. So this will give you a whole list of information. One place to go and look for the green markers, USO, which is the US oil, TSI tick up. Look at UCO. I want to be trading the leverage index on that. What about Tesla, NVIDIA, or Netflix? Nothing. No long triggers. Now, what I'm saying for setups, I'm looking at bullish setups to the long side. I am not talking about, short side setups in case some of these are in fact doing it. So all these are in uptrends. And what in the comments I make is tells me what needs to happen for Tesla to come back into a setup as one. I need a bounce off the 820 combo. Same thing here. Same thing here on Netflix. LGIH is a new add to the IBD 50 this week. And I was really surprised is this was an add to the IBD 50 that had just completed a pullback. And so it pulled back in, and so I'll be looking for a pullback into Friday's candle about the 43.80 level. TSI has already fired off on this one, but I'll consider that, yes, as a setup. Why? No setup. At resistance, need breakout or a bounce. And then CRUS, no setup for this week. Good volume on the initial move up, need a pullback to the 820 combo, and it's around the 57.50 level. So for premium members, if you like this format, please send me an email saying, hey, that works, Dennis, because it gives us the ability to basically now know what we're looking for going into the rest of the week. And then I'll be updating this. The other thing this does is it streamlines what we're looking for. In other words, during the week, if we're doing our research, all I have to do is cover these 7 ETFs, these 3 stocks, and these 3 floater stocks that floated to the surface of either an IBD 50 fundamental sort, but I really like that. I am making this on the radar video available to non-premium members just for this weekend, simply because we are having a special on our membership that ends Labor Day. That's today. So I just want to give you an impression of what is offered with the premium members, and this is one of the features that is offered. So let's go on over what's next. Well, I want to talk about the LGIH setup real quick. As you can see, here's what I was talking about. Basically, we get a LGIH strong reversal with 11% to the $50 level. In other words, so from 45 to 50 would be about 11% move. It broke out above the short-term downtrend. That's positive. So I'm looking at the middle of that, big, large green candle for a potential entry. I've got a positive TSI tick up, momentum tick up, and we have the market forecast, 3-line cluster, bullish cluster, and a tick up. And look at that really nice buying volume that's saying, okay, LGIH, somebody is buying this for a reason. Now, could it crap out on us? Sure. But the fact of the matter is that it has done a really nice little pullback. And notice how on most of the pullback, except over the last couple of days, the volume has been below average. We did get a little bit of a selling here, but that was in tune with the rest of the market. Now, when we look at tomorrow, which will be Tuesday, the 5th of September, there may be some things to be concerned about. So I don't think I would want to buy the breakout here, but if I get any interaction that gets back to the 20 or the 8-day moving average or even the 50-day moving average, that may give us an opportunity to get back into this trade and then proceed higher. Right now, as we look at what's going on in the futures, as you see, the ES futures, this S&P futures are down 6.25. The Dow Jones futures are down 61 points, and it's all nervousness over in the North Korea area and the issues that are going on over there. That's part of it. Up to this point, the market has taken these international events and discounted them and rebounded really quickly. And so, until it stops doing that, we have to look at all pullbacks as an opportunity to go long. So, other thing I want to talk about real quick is seasonality, and I've shrunk down the seasonality aspect of this into look at just the last 5 months of the year. Of course, August is gone, but look what tends to happen. This is the S&P. I want you to look primarily at the pink line. This is a 59-year average. As we see, for September, typically we get a pullback towards the end of September, and then a little bit of a bounce and another little tweak down in the last part of October, and then normally the S&P historically runs about 4%. So if we translate that to like UPRO, which is a 3-time leverage ETF, this run would be approximately 4 times 3, 12%. So very interesting to watch this. One of the things that I'm working on right now is basically identify when this point and this point tend to, what's the range of when they could happen? Because if you just take this 59 years worth of data, it tells you, okay, I want to buy the last week to week and a half of October, and then I just write it to the end of December. Well, it's not quite that simple, and so we're in the process of refining what those entries will be, and we'll be sharing that with our premium members. So that's what I want to look at, SPX. The seasonality trades have worked really well this year. And so that's why I wanted to blow this section up just so you can take a look at it. What's next? Well, NASDAQ. NASDAQ tends to run up into September, tends to be a little bit stronger than the S&P, which it is showing that it's doing that this year. Then you get a pullback into the first part of October. Again, this pullback is bracketed. Doesn't necessarily have to happen, but I want you to take a look at what tends to happen from October. Runs from 6 up to approximately 15%. That's 9% on the index itself. Relate that over to TQQQ, which is the NASDAQ 3-time leverage ETF. That would be 9 times 3. I think that turns out to be about 27%. Potential. That's a potential on the whole move. Are we going to capture all that move? No, probably not. But if we can carve out the middle section, that's fine. If we can just carve out that middle section and just take from, let's say, take from about here. And I didn't do that very well. Let's try that again. Just that middle section like that. We'll get rid of that one or move it out of the way. That if we can just pick up a piece of that, like 10, 15, percent, that would be absolutely awesome. So NASDAQ tends to do better. And then finally, let's take a real quick look at our next one, which is, so that was 19, it was what, 27% on that. look at what goes on with the Russell. The Russell tends to fall out of the sky in the September, midsection of September, falls, rebounds, and if we take it from 2 to about 8%, that's about a 6+% gain over the last few months of the year. And so the 6 times 3, they give us about 18% for the full move. So that's what we want to be aware of. One of the things that we will have a great idea on prior to the end of the year, though, prior to we get into October, I'm going to have my research done prior to that, is what really is that range there, that bracket where this tends to happen. And I'm getting some really good results on the research on that as we speak, and hopefully it'll help us get into longer term trades on the indexes, which is a good thing. So I wanted to share that with you really quick because those seasonal trades are very important. We'll come back to that just briefly. I want to run over here really quick and just take a look. What did we say? We had green lights on. Okay, we had, let me pop this out too. We had kind of a green light on a couple of entities that we're looking at for the week. We had holds on, but we had a green light on LGIH. We already covered that. We had a green light on UCO. USO. Let's take a look at UCO and what that would look like. And let me call up the chart. That would help. Okay, UCO, here's what we're looking at. Is basically it's still running below that downtrend, but we had a nice, on a weekly chart, had a nice hammer coming off of support. If it breaks above that, we may go back up to this level of support. But where we look at the USO, if I'm not mistaken, has, no, but it has not. It has not broken up above that trend line. But if the economies if the global economy kind of gets wishy-washy due to things going on in North Korea and all that kind of stuff, these commodities like gold, like oil, may get a pop. And so we'll just keep our eye on this. They have been low for quite some time. You can, draw your, and so we just get a TSI tick up, needs to pop back up above the 8 or the 50-day moving average, UCO, again, just about ready to pop back up. And even if we get a run from here, no, I don't want that. We get a run back up to, that's about 6%. If it gets back to the past highs, it'll be 11%. If it runs on harder than that, let's say, because what that would characterize is if this turns out to be a swing low, that's a higher swing low. And so that would be basically moving back up. And where might we expect it to go, a UCO, if we apply symmetry and basically just do one of these? Let's just do a real quick retrace to see what we do. Let's go here, here, and here. 100%, we'll put a 100% retracement. That would be the same as this move here over those weeks. We'll put us up about $19. $19 would be there. And just a real quick target, $19 for $15. That would be, a nice 25% gain. And it may also be oil kicking back in. What was the other one? XLF. Again, XLF bouncing off the lower Keltner channel. TSI moving back up. Look at the positive divergence here on that move there. A little bit of increase in volume, not a lot. And so it has actually, if we take this line across here, it has broken that little trend. But as we say, nothing to get really excited about. FAS, because that's a shooting star after a short uptrend, but it is back above the 8, the 20, and the 50-day moving average. Therefore, those should provide support, and we'll see if we get a rebound and a move up from there. If we move from where it's at up to the past highs, you're looking at about a 5.8% gain. If it moves higher than that, so much the better. And I will show one more thing, and that's IBB. IBB has pushed on to higher highs, and this is what I was talking about. Watch for a pullback down into the 330 level, and lastly, which we would probably trade LABU. There we go, LABU. Again, it has pushed up and pull back into the 76 level. We can look at, but as we said, we have just about peaked out here on the True Strength Index, and if we take a longer term look, this 75 level is about as high as it tends to get. The last time it got up there, it did a double peak, fell, did a negative divergence, fell, and now we're pushing back up on, on good, a good reversal, good extra volume, and so I like the biotechs. They appear to be getting back in gear, but we just need a pullback. Right now they are extended way away from their 20-day moving average and all of their moving averages. So we'll keep an eye on that. So, okay, guys, that basically does it. As I said, I am offering this video today to anyone who wants to take a look at it. And if last day, through Labor Day, that is today, you can basically become a active trend trading member and save 40% off the regular monthly fee. You can also take a look at the early warning alerts, save 40% off that regular yearly fee. And if you'll go to this website down here, you can link into those opportunities. This link will only be good through the rest of today. That is the rest of the 4th of September. And for you guys on the mainland, we'll go Hawaii time so that it'll give you an extra 3 or 6 hours to take advantage of this opportunity. So with that, I just want to say thank you very much. We're always about clarifying, simplifying, and so that we can all multiply. I'm really looking forward. I really want as many people as possible to be able to take advantage of the seasonality going into the end of 2017. You may not have had great success, and I'm not promising success, but I'm saying we'll have some setups going into the end of the year that if you're just getting started trading, all that kind of stuff, that if we pay attention, we'll have some opportunities to get into some good trades on the indexes prior to the end of 2017. So kickstart us to get ready for our campaign in 2018. Okay, with that, I bid you adieu. God bless everybody. Have a great rest of your Labor Day.